So today we're going to quickly look at how you can incorporate an existing business. There's two main ways. First, you need to realize that your business and you are separate things. Someone can come off of the street and offer to purchase your business if you're a sole proprietorship. In this manner, remembering that a corporation is treated as a person in the Income Tax Act, it needs to come and purchase your business. So that's option one. To incorporate a business is to have the corporation pay the fair market value for your business. Now, what is that value? It can be really hard to figure out. Valuing a business is one of the more tricky things that exists, and there is a whole designation of people called Chartered Business Valuators, which is an extension of the accounting designation, and they specialize just in valuing businesses. What's the other way? There is a technique called a Section 85 rollover. It's referring to a section in the Income Tax Act called Section 85 that allows for a sole proprietor to roll or move their business into a corporation and defer any taxes that would be otherwise payable on the value of the business. Remember that if you sell your business for, let's say, $100,000, even though no cash needs to exchange hands because it's you and your corporation, there still needs to be taxes paid. The rollover allows you to defer or wait to pay those taxes until a later date when you are ready, and you can spread it out over many years. That rollover requires help. It is very complicated, and making mistakes in it can become quite costly because you get penalized for the mistake and you still owe the taxes. So those are the two options that you have. It can be done, but when you're ready to do it, make sure you seek out help. Make sure it's done correctly. I would not recommend just attempting to do it on your own, just incorporating something and then beginning to move your business activities into there, because if audited, it can cause issues. That said, many businesses have something called personal goodwill. The value of the business is tied entirely to you yourself. Someone could offer to buy it, but they would never get anything from it because your clients and your customers are there for you personally, not the business. If that's the case, then there is room to argue that the value of the business is $0. No one would pay anything for it. In this case, moving the business into a corporation can be done paying $0 as well. However, I would still recommend that you obtain a second opinion on that for your business, just to make sure, because you do not want to do something and have the government come in, audit you, and result in you paying a lot of taxes and potentially penalties or interest on that.